Had we not made this anti-fossil fuel push and, closed down Keystone, all that stuff that you all remember, would we be in the energy pickle we are in right now, dependent on, handing out tin cups here while looking at OPEC? It does make you wonder. Carol Roth here, former investment banker, The War on Small Business, runaway bestseller. Dave Maney here as well, Deek News, Brainiac. Let me ask you, Carol, about that. And I thought it was a brilliant point by Phil that, by backing away from fossil fuels and oil, and I don't get people's political views on this, but just sheer math, we put ourselves in a position where we have to look to OPEC and OPEC plus countries to bail us out. It is weird, isn't it?
Yeah, I mean, we were on this path to energy independence and finally getting out of the thumbs of the cartel, and we have been sort of brought back in again, and the supply and demand imbalance right now is completely out of control. Goldman Sachs came out with a note. They said that we're starting at like a 2.5 million barrel a day deficit, and by the end of the year, they say we need 5 million barrels a day of an increased production. So even if OPEC starts with this, 400,000 barrel a day increase, the fact that we're not producing at the levels that we were before, and between the Biden administration and this push for ESG and all these things that are decreasing the desire to have our own energy independence, we are feeding into that as well. So it is, the sort of complete bizarro world.
So you're looking at all this, Dave, and weighing the maybe that this isn't such a transitory phenomenon. This lasts a little while longer than we thought. Then what?
Well, one thing that I think is interesting is that climate obsession or green policies sound on the surface or are presented as being costless, right? Well, let's be green. Isn't that great? That's great. They have short-term price impacts. They have long-term price impacts. And you can see in this scramble of, hey, where the Biden administration says, please produce OPEC, please produce. That's not about green policy per se, but they are doing things. Remember, the Keystone XL pipeline was not about primary supply. It was about expanding the amount and the flexibility of the crude supply and the origins. It was to get Canadian oil more easily flowing into U.S. markets. So now you take that away, you take the prospect of it away. And what we're doing is making the energy system more brittle, the supply variability less. And ultimately, that's going to whack people hard in the pocketbooks. And what you see the Biden administration doing is saying, oh, wait, just this small supply disruption, we don't want that. They're going to get bigger.
Yeah, it is interesting. I'm going to switch gears, guys, and talk a little bit about Amazon right now, because we talked about, technology stocks. They'd be a lot worse off. The NASDAQ would be a lot worse off if not for Amazon. That stock is right now just soaring up better than 110 points. It had surged a lot, remember, on Friday before the markets were closed, with its 3.6% run-up today. At this point, on top of the 2.3% run-up last Friday, Carl, we're looking at a stock that could be on the verge of yet another record. All this on the same day we hear Jeff Bezos is stepping down from running the company day to day. And one of the things that's been fueled, and our Charlie Gasparino has reported it, is that the new CEO might be more open to a stock split, something you see ignite buying interest when they first get whisperings of it. But what do you think of that, and what this could signal for Amazon?
Yeah, well, I mean, first of all, we have to thank the Federal Reserve and obviously all of these technology companies that have gained trillions of dollars in value. Much at the expense of Main Street. It's been transferred directly into these handful of technology companies. And now you've got a third technology company that's knocking on that $2 trillion market cap, which is completely insane. The stock split thing is always interesting. Because obviously it doesn't change the value of the company, but it does change the perception and the ability for it to be more accessible for retail investors. So I feel like, that's something that, there's a lot of optics around it, but I think the bigger issue here for Amazon and for all of these tech companies is what is going to happen with the Fed. Are they going to continue to support and prop up government spending and make sure that the rates stay low to the potential detriment of everything else, or are they going to be pressured? And I think that that's the bigger underlying story.
Dave, the backwind for this is obviously the improving economy, people more interested in buying stuff. That's a volatile stock, like a lot of technology stocks. Coffee is a rewarding one for investors. But I am interested in getting your sense, and you touched on it with the rising energy prices, how that could put a dent in things. But the mood of the consumer right now, because very strong in the first half of the year, picking up where we left off as we journey into the second half. What do you think?
I think there's a lot of invisible but ultimately impactful kind of water torture factors coming at the consumer here. So you have this energy thing, which is, sort of stands outside, with its volatility, the normal consumer price stuff. But then you have on so many fronts inflation that, in my opinion, is not being fully reflected in the CPI. So I happen to be our household's grocery shopper, and I can tell you that prices for meat and prices for dairy products very high, like significant increases. Those things, you may not feel them as kind of a, there's some kind of crisis in the economy, but that kind of drip when you're on somebody with a limited budget, and you suddenly kind of realize, geez, usually we had, $100 left at the end of the week, it's gone. Then it starts to impact spending on all kinds of consumer goods, on restaurants, on entertainment. That we're not used to that. Our generation is not used to dealing with that in inflation impact. And I think it's coming.
I'm just left with the vision of you shopping and knowing all of this. Touche to you. So I'm just very, very impressed. I'm sure Carol feels the same way. Guys, I'll be talking to you a little bit more in just a bit.